Saudi Arabia's state oil company will be investing $7 billion to set up an oil refinery in Petronas RAPID project in Johor. According to Prime Minister Najib, this would be the single largest investment in the $27 billion Pengerang project. The decision was made today after talks between top execs from Petronas and Saudi Aramco. Najib says the deal, to be signed tomorrow, is a vote of confidence in the Malaysian economy. The announcement comes just weeks after Saudi Aramco reportedly decided to shelve a plan to partner with Petronas in RAPID over concerns it would not yield high returns. The RAPID project is designed to have a refinery able to produce 300,000 barrels a day of crude oil and a petrochemical complex with a production capacity of 7.7 million tonnes a year. It is expected to start operations in 2019. Prime Minister Najib says even oil-rich Saudi Arabia once increased the price of petrol at the pump by 50% amid grumblings over the recent fuel price hike. According to Bernama, Najib drew attention to the fact earlier today, saying that Malaysians make a lot of noise when prices go up 20 to 50 cents. Saudi Arabia hiked petrol prices last year after posting a record budget deficit for 2015. It raised the price of RON 95 from 0.6 rials or 71 cents per litre to 0.9 rials or 1 ringgit and 7 cents. And it's reportedly looking at increasing prices again for the second year in a row. Najib also says that the Brim handout and GST are justified. The PM, who met with visiting members of the Saudi Arabian cabinet yesterday, says that the Middle East's biggest economy is looking at introducing the consumption tax. It's also providing financial aid to its people by banking in money into their accounts. Sime Darby announced a 165% surge in second quarter net profit, buoyed by stronger performance in its plantations segment. Net profit came in at 644 million ringgit, boosted by an increase in CPO prices and better production of fresh fruit bunches. Top line rose 4.3% to 12.3 billion ringgit. It announced an interim dividend of 6 cents per share. For the first half of the year, earnings jumped by almost 79% to 1.1 billion ringgit. Revenue came in 2% higher at 22.4 billion ringgit. As you know, Sime is proposing to list its plantation and property units. The conglomerate announced today that the exercise includes a restructuring as well as the distribution of its entire shareholding in the two entities to shareholders. The number of shares will be proportionate to the current shareholdings in Sime Darby. Star Media Group saw lower print revenue eat into its fourth quarter numbers. The publisher of the Star newspaper posted a 20% slump in net profit to just under 40 million ringgit. Revenue was down 7.3% to 260.4 million ringgit. It still declared a second interim dividend of 9 cents per share. Full-year earnings also not looking rosy, down 17% to almost 110 million ringgit. Revenue also slipped, down 8.5% to 932 million ringgit. Prospects-wise, Star Media is expecting advertising expenditure to remain soft, but the sale of 2 loss-making radio stations and the production and distribution firm Victory Hill Exhibitions will help with its performance. CIMB, which operates Bank Islam and Syarikat Takaful Malaysia, saw fourth quarter net profit shrink some 14% because of lower Islamic insurance income and higher taxes. Earnings came in at almost 140 million ringgit from about 162 million the previous year. Revenue inched 3% lower to 856.8 million ringgit. As for the full year, BIMB's net profit was up a marginal 2.7% to 559 million ringgit. Revenue climbed 6.6% to 3.5 billion ringgit. For 2017, the group says Bank Islam will be focusing on driving deposits and going digital, while focusing on a more balanced growth. While Takaful Malaysia will continue its emphasis on customer reach, operational agility, cost competitiveness and stakeholder confidence.